I will be showing you a complete beginner's video on Forex trading. So if you are a beginner, just make sure that you watch this video from the beginning to the end. You are going to learn everything that you ever need to know about Forex trading. And I am someone that will not hide anything from you. I will tell you all the secrets that you need to know, the tools that you need to know, and how you can succeed in it. So it will be good for you not to skip any part of it. So these are the topics that we will be looking at in this video. I will be treating all of these topics that you ever need in Forex. It's going to be interesting. We have a lot of the topics, about 30 topics that needs to be treated. So this is going to be a comprehensive and a full complete guide video that you need in order to start trading Forex. Let us start with the first topic. What is Forex trading? Forex trading is simply trading of foreign currencies. So the Forex is just the short form for foreign currencies. So you are trading the currency of one country with that of another country. You can see that we have so many pairs. A pair is one currency like the US dollar against another currency. So they always occur 2-2. For this particular one now, you are trading the US dollar against the Japanese yen. And you can see there's another one, US dollar against the Canadian dollar, and another one, US dollar against the Swiss francs. And then there's another one again. You'll be going down. There are so many of them that you can trade. So you can see even US dollar against the South African rand, and we have US dollar against Chinese yuan. There are so many. Okay, I will come and talk about them when we are referring to this. So whenever you are buying and selling, either you are buying the US dollar, selling it, or you are buying the Japanese yen, selling it, that buying, that process at which you will click a button to buy and you click a button to sell, that transaction that is occurring is what is referred to as Forex trading. Your ability to determine that, okay, the market is currently here. Let me enlarge this chart for you now. This dotted line that you are seeing that is tiny red is showing us the current level of the market. So if the price is currently here, if you click a buy button and markets begin to go up, you will make profit because you bought at a lower price and market now is moving higher, so you are making profit. If market is here and you click the sell button, you will see that if the market goes your direction by going downwards, you will still be making money even though the price is falling down, because you are predicting. Is actually about you predicting the direction of the market. So if you say from this point onward, I click a buy, market will begin to go up, then you are correct. If the market goes up, you will be making profit. If from this level you say if you click sell button, a market will go down. When you click that sell button and market begins to go down, it means you predicted it well. You will be in profit. So it doesn't matter if the price is falling or is going up. As far as you get the direction right in Forex, you'll make money. So Forex trading is all about buying and selling of currency of another country against that of another country. So we have now known what Forex is all about. So the types of Forex assets or instruments, some people refer to this pair that occur together, like the British pound against US dollars, or Australian dollars against Canadian dollars, or the US dollars against the Swiss franc. All of these that you are seeing are pairs. They occur to PAIR. They occur to. That's why some people call it pairs, whereas some people call it assets. Assets are things that if they appreciate in value, they give you money. So some people call them Forex assets. So some people can call it assets. Another one can say Forex pairs. Another one can say Forex instruments. Whatever word you use, it does not determine how profitable you are going to be. Just know that if you are buying and selling in the right direction, you will make money. What is a broker? When you are trading Forex, you will be hearing people talking about brokers, and it is very important that you get it right. Okay? You cannot just come, maybe carry your phone and just you begin to buy and sell. Where are you going to buy it? Where are you going to sell it? You are buying from who? You are selling to who? So it is an organization. They are just like banks, but they are not banks. Okay? They are just like banks, but they are organizations that have license. Like that organization should be well regulated, and your central banks can regulate them. Some, the economic and financial commissions of your country can regulate them, and a lot of other regulatory bodies, they can all regulate these brokers, because anything that has to do with finance should be regulated. If they are not regulated, you can deposit your money with them and they will not give you back. You cannot withdraw it. They begin to give you reasons why they will not give you your money. And imagine if the broker is in another country that you are not located in. How are you going to report them? So whenever you are going to get a good broker, you should get the ones that are regulated. So what are the examples of these brokers? We have thousands, and I mean it, thousands of brokers. They have their advantages and disadvantages as well. So I will explain the most important thing for you to look out for whenever you are taking any broker to go and register with them. You need a broker in Forex, is a must, because they are the ones that provide the platform for you to click for buying and for selling. And there are some that are available in some countries, and there are some that are not available in some countries. So it's good if you are going in, you check the ones that are available in your own country. I am making this from Nigeria, and we have most of them working for us. There are some that are not available for trading in Nigeria, and some are only available to American, and some available to UK, some only available in India, and so on. Okay, so these are the examples of these ones. We have AvaTrade, we have IG, we have XNET, we have XTV, TestyFX, Salzo, we have eToro, FXCM, we have Active Trades, we have XM, we have CMC Markets, Forex.com, plus 500, we have Oanda. There are some of the brokers here that it may take 1 hour for them to confirm that your money has been deposited. So the time for deposit, there are some that will take less than 1 minute. Your money has been deposited. Now, this depends on the method of deposit that you use, which also differentiates these brokers also. Like the ones that I am using, I am not telling you that those are the ones that are best. You look out for what is good for you, okay? There are some of them here that when you deposit using your bank account, like direct transfer, they allow you, like this XNES now, it allows you to make deposit directly from your Nigerian bank account into their own account, and it will take literally less than 1 minute. There are others that will allow you to also deposit apart from your bank account. They will allow you to deposit using PayPal, which may be easier for some people. Others may allow crypto for you to deposit using crypto. And even in the crypto, there are some again that may allow you to only deposit using USDT and USDC. Some may allow other cryptos like Solana, you can deposit, Ethereum, you can deposit, Bitcoin as well, but some may have restrictions. Some may say only USDT. That is one. So their deposit, the time it takes them to deposit, how fast is it? You have to look into it when choosing a broker. There are some that are very fast, less than 1 minute. And then there are some that allow for cards, your bank cards. So when you deposit using your bank cards, they will tell you that you have to also withdraw using your bank cards. Most of them, any method that you use for deposit, you have to use the same method for withdrawal. And when withdrawing, there are some that when you make withdrawal, like the ones I have used, if you are making withdrawals, there are some that may take 5 minutes. There are some that will take 1 hour. There are some that will take 24 hours. Check each of the websites, when you go check their websites to know what each broker can do, okay? You have to check it. And then, apart from withdrawal, do they actually do the withdrawals? Yes, some will not give you any headache when you are making withdrawals. There are some that will allow you to deposit easily. When you begin to withdraw, they will tell you you didn't submit this other document, you didn't submit this other document, is not clear. They begin to get you frustrated and they may hold your money there for long. The next that we have to check for brokers again is how fast their server is. So when you click a buy button and a sell button, you want to buy, how fast can their server ensure that that order is taken? Especially during news. When I come to talk about news, you will know why I am emphasizing this. So you want a broker that can take your orders quickly. Some brokers are very sluggish. Their servers are very sluggish. When you click close, it will not close. Again, the minimum deposit. Some can allow you to do $5. Some can allow you $12, and some can allow you $100. So if it is something that you have, depending on the amount of money that you have, you will choose if you have to work with a broker that deposits $100 minimum or $5 or $12. So having known that, another thing to look out for when choosing is what is known as leverage. The leverage, okay? You have to check their leverage, which is what some people refer to as their margin. So their margin or leverage is just like if you deposit $100 now into a broker like this, to what extent can they multiply your money to allow you to take a trade? So some can tell you the maximum amount of money we can multiply to you will be 100 times whatever amount that you deposit. So if you deposit $100, they can multiply that $100 to be 100 times 100, which will be $10,000. That does not mean you can withdraw $10,000. No, you are not going to withdraw any $10,000. The only amount you withdraw is the one you deposited or any profit you made on that amount. But one thing in Forex is that the minimum amount you need in order to start buying and selling, the minimum that you need to start buying and selling, you need a minimum of $1,000. And most people do not have $1,000. So if you don't have up to $1,000 in your account, you may not trade. So most brokers have known that. So what they do is when you deposit any amount of money, they will multiply it with their own amount of money. But their own amount of money, you are not going to withdraw it. You can't withdraw it. You can only withdraw the one that you deposited or any profit you made on the one that you deposited. If they don't multiply it, most people that have $100, 200, 300, 500, $5, $12, they can't trade the Forex market. So that money that they multiply is what is known as leverage, or some people call it margin trading. Margin. Okay. So if a broker tells you the maximum amount we can multiply your money is times 100, it means the leverage that they are giving you, maximum leverage, is times 100 of whatever you deposit. Some can tell you we can give you unlimited leverage, which means even if you deposit $5, you can trade. Even if you want to trade a size that is up to 1 million, it comes with its own risks, highly risky, and I will explain them when I reach there. So some can offer you a leverage up to 2,000. Some can tell you it's unlimited. But I can tell you as an experienced trader that you don't need any leverage to be more than 100. That is just the truth. So any broker selling you that they have unlimited leverage or they can give you up to 2,000, you don't even need a leverage up to 2,000. Even 100 is enough. 100 is more than enough. Except you don't know what you are doing or you want to enter into Forex just to gamble it by increasing. You want to use $5 and enter a lot size that if market just moves tiny, a small move of the market like this can give you $1,000 or drain the remaining $5. That is gambling. So you don't need any leverage to be even more than 100 times. So leverage should not be something that the broker should use to be selling to you as a beginner, that they have unlimited leverage. Even with $10, you can open a big lot. You don't need it. So those are the major things that you should look out for when creating an account with any Forex broker. So we have known from this aspect to these aspects. So what are the types of accounts in Forex? In Forex trading, we have two major types of account. A real account, which you are going to use your real money and you can deposit using your bank account. And when you deposit using your bank account, any profit you make on it, you can withdraw it back to your bank account. So if you deposit $100 and you make $500 as profit, you have a total of $600 in your account, and you can withdraw that $600 back to your account. You have made money with it. That is how you make money. So you need a real account for this. But the same way you deposit, you can also lose your money. It's risky. Forex is risky. So you can also deposit $100 and you end up with zero. Your money is gone and you can't get it back again. Okay? Yes. For a demo account, is a fictitious account, is not a real account. So you only use a demo account for practice, to know how to buy and sell and to know how Forex works before you deposit your own money into a real account. So a demo account, the candles are the same, everything is the same, just that the money you see in it is not your own. You can't withdraw it into your bank account. You can only use the money there for trading. It's not real money. They just put the figure there for you. Neither is it even the money of the broker. It's just a fake money that is given to you to know how to use it for trading. Under this real account, there are different types. Demo accounts are demo accounts. It doesn't matter. But under the real account, there are different types of real accounts. And I am going to show you. You can see it's indicated this is a demo account. So it is not a real account. A real account, you will see it written with real at the top here. If you want to create a real account, you have to add an account again. You have to register with them, give them your email address. You create your own password for accessing it, and they will give you a real account that you can make deposit and withdraw from it. So whatever you see on a demo account, it is exactly what you will see on a real account. The only difference is that you cannot withdraw money from a demo account. A broker can offer, like Xnest, they can offer you minimum deposit of $12 for their standard account. But for their pro account, they can tell you that your minimum deposit the first deposit you have to make has to be $500. Now, why? Their advantage for a pro account is different from the advantage from a standard account. Now, I will explain why for you. There's something called spread when I come to talk about spread, but let me just explain it for you here to understand. For spread, you can see this line where this market is. If you are buying that you predict that this market will go up and you buy, you are supposed to be taking in at the place where the market is. This is where the price is supposed to take at that blue line. But instead of buying for you there, it will not buy for you at that point. It will buy it higher up here. It may buy higher up here in a standard account. Why am I saying that? Is because your broker has to make profit. So even though the price is at this lower part, when you click buy, they will have to buy at the higher part. This gap that exists between the price where you are buying and where they are taking you in is what is known as spread. That is like a commission on what the broker is going to make. So they are making a little amount of money. Sometimes it's $0.04 or $0.06, depending on the broker. So this gap that you are seeing on an account like a pro account, the gap may be reduced to a tiny gap like this one. Whereas on a standard account, the gap may be wide. You may see it wide like this. So you see, even though they're allowing you on a standard account to deposit $12, their spread on a standard account will be wider. So they tend to have wider spread, which can affect you. You need market to move up higher for you to make profit on a standard account. But on a pro account that the spread is so tiny, if you buy, it's just as if you are buying at the same spot as well. Then there is another account again, they will tell you zero spread account, an account that does not have this gap of the difference. There is no difference, just only one. You will see it just like this. The way the market is, where the market is, when you click, you enter there. How are they going to make money from an account that does not have a spread, where there is no gap between the buying and the selling? They will make their own money by commission. So if you enter one lot, I will come and explain what lot is. If you enter one lot, they will charge you, some can charge you $4, some can charge you $6. So if you enter one lot size, look at the lot here. Let me say I am going to enter one lot. You can see this is one lot now. Look at your account balance. In a zero spread account, they will can charge $6 per one lot. So they will deduct this $6. So before you even make profit again, you have to make money that is more than this $6 to see that your account is growing. So each of these accounts, they have their own advantage and they have their own disadvantage. Scalpers love this type, where you are buying should be where you enter, not that when you buy here, they will take you up because of the spread. Like scalpers, they want to catch little movements in the market. So they don't want any spread affecting them, that you buy here and you have to go up before you begin to make profit. No. So you can see with one lot, you can click on a buy and they will take you in immediately. You can see the money has been deducted already. So we have finished all of this from here to here. The next thing is a margin call. So what is a margin call? You see, the amount of money that I have in my account currently for this demo is $2,246. If for any instance I enter a lot size that is bigger than this account, let's say I enter 100 lots that is bigger than this account, I confirm as buy. You see, I have entered 100 lots to confirm it as a buy. The bigger the lot that you are using, the bigger the profit you will make if market moves small. If market goes against you, you see, I'm using 100 lots. If market goes against you, you are going to lose more. If market goes in your favor, you will win more because of your lot. So your lot is just like the amount of the assets you are buying. You know, if you buy like 10,000 iPhones and you are selling them, you buy each at the rate of $1,000. You know, if the price goes up to $2,000, you are going to make a lot of money because you have many of those iPhones. But if the price crashes to $500, you are going to lose a lot of money because you have many of those iPhones as well, compared to if you were just having one iPhone. So this lot is what determines how much of the assets that you are having, you are holding. You can see just tiny movement from here to here. I am in loss of $94. You can see it. So if you increase your lot, you will lose more or you gain more. If you reduce your lot, you will lose less or you gain less. That is how it works. So by the time you increase your lot to be more than what your money that you deposited can afford, once that money begins to drain, that what you deposited was initially $100 and market moves small because you increase your lot, market moves small against you, and now it has drained the whole $100, you will have what is called a margin call, which means the margin has been drained, the leverage has drained the whole of your account. So you will send you a notification that you have a margin call. You either add money quickly or the whole of your account will go no need to add money, your account is gone. It means you use a higher amount. So that is what I'm telling you, that this lot that you are seeing, if you have $100, no need to use a lot that will increase your risks. That is why leverage, that they gave you unlimited leverage, does not mean it is an advantage for you, because the higher the leverage is just allowing you to increase your lot size to enter the market by buying more of the assets or selling more of the assets. And if market goes against you, you will regret it. So it's not necessary that they gave you a big leverage, then it means that you can increase your lot size. No. Use the lot size that is appropriate for your account, and I will explain that later. If you want to know how lot sizes affect you, a video will appear at the top right hand corner explaining how lot size can affect how your account can be drained, so that you will know the correct lot size to use. It will appear at the top right hand corner right now. So if you drain your account by taking a big lot, you will have what is known as a margin call, and your account will be closed and your money is drained. You can't get it back again. Next is Forex trading hours. What are Forex trading hours? The Forex market is actually opened from Mondays to Fridays. There are no markets on Saturdays and Sundays. So weekends, the Forex market is not functional. Only the crypto market opens on weekends. As you can see, this is the crypto market is currently on. The time that the market opens officially electronically for everybody across the world, it opens by 10 p.m. UTC plus 1. Depending on your time zone, you can adjust it to know what time will it reflect in your country. But I am from Nigeria, we use UTC plus 1. So it opens 10 p.m. UTC plus 1. At that time, you can see all Forex pairs will open for you to start trading them. But you are not to trade at that particular time. Why? Because there is a best time for you to trade. Like the way I say, what is the best time for you to trade? If you trade because market is opened, like I explained to you regarding spread, you can enter for a buy somewhere where this blue line is, but the spread may be so wide that you see it up here. So when market opens, there are no buyers and sellers. They are not enough in the market. So the person that is willing to buy wants to buy low. The one that wants to sell high. So the gap will be so wide. By the time you click on a buy, you'll be taking it up here. And before you make profit, market has to push up and pass where they are taking you in before you begin to see profits. You don't want to trade around that time. So when market opens electronically across the world for everybody by 10 p.m. UTC plus 1 on Sunday, you are not supposed to start trading around that time. Wait for specific times. There are times that there are a lot of buyers and a lot of sellers in the market. There will be high volume around that time. This gap will be collapsed. If you want to learn more about spread, a video will pop up at the top right hand corner. I showed it on a live video where it happened in the night and during the day. So you will see that the gap will be wide on Sunday when market opens until it passes 1 a.m. or 12 a.m. or 11, depending on the pair that you are trading. But most times by 11, it will now collapse. You will now see the gap will now collapse. Even though the spread is collapsed around 11 p.m. UTC plus 1, I don't trade still around that time. Why? Because the market does not move much around that period. There are times that when you enter the market, you want that once you enter a market, it should push in your direction with speed. And that is what you are looking for. You don't want to be wasting time in the market where it will be going like what you are seeing happening now. It will just move small, come back, move small, come back, move small, come back. You don't want that. You want something that when you enter the market, immediately you enter around, it should start pushing. And there are specific times that you can do that. That whenever you enter the market, it will begin to push with speed in your direction or against you. If it's going against you, it should go against you quickly. If it's going in your favor, it should go in your favor quickly. You don't want to be wasting time in the market. Okay. So I am going to show you on the chart these colored parts that you are seeing. They are the Forex sessions. So around this particular point, 8 a.m., that is when the London session starts. The London session starts from 8 a.m. UTC plus 1, and it spans until it stops around 5 p.m. UTC plus 1. The New York session starts by 1 p.m. and it spans until 10 p.m. in the night again. You see this overlap that happens where the London session comes and overlaps with the New York session. This is the period of high volume. This is the time that you need to trade very well. You may think it's so small, but this is the point where if you get any entry here, you will see the market move swiftly. Look at just this candle. Within 15 minutes, this candle has reached here. Another 1, 2, 3, 4 candles, it has moved from down again to this point. Within 1 or 2 hours, you can trade for the whole day and you are out of the market. This overlap is the highest period of trading in Forex. Even crypto obeys this particular time because the London and the New York session are the ones that push the market very well. And when they overlap, that is when the market moves very well. So the overlap is the best time for you to trade. And that best time for you to trade is from 1 p.m. till 5 p.m. I've shown you the best time for trading. I have also explained what is spread in Forex and how it can affect you. I have shown you that while explaining what brokers are all about. Now, I need to explain to you what commissions are and fees and swaps so that you don't just see things reducing your Forex profit and you say, what is happening? This broker is scamming me. No, it's not scamming you. Let's say you started selling GBP USD at this particular level. So market is going to be going down, you predicted, and you know it's going to go down for a long time. Maybe you know it's going to go down for 2 weeks, 3 weeks. So you want to start selling it and you enter here and market started going in your direction. This day that you entered was 1st of July on a Tuesday and you entered around 11 a.m. and it reached the Tokyo session. You see, this is a completely new day. But the number of days that you have been holding this trade, they have to charge you. Any currency, foreign currency that you hold, they have to charge you a commission for holding that currency. And that is what is referred to as a swap, fee. And it may not be much, and it can be much depending on how much you are holding. They can tell you for every 1 lot that you hold overnight, we are going to charge you maybe $3. Depending on the broker. So you will check for your broker if you know you are going to be holding trades for weeks. If you hold it longer, you'll be seeing them every day. Once it's 10 p.m., they will deduct that amount. So there are some that they will not charge you anything. However, their commissions, like I explained, per lot size. So they can tell you for every 1 lot that you enter, we will charge you $5, but we will not charge you swaps. So you can hold that. Once they have deducted that $5, even if you hold it for 10 days, is still that $5 on that particular 1 lot that you entered. That is what is called a commission. Then there are others that will charge you fees for withdrawal. If you are withdrawing, they will tell you for every $100 you withdraw, we charge you $1, like a processing fee. So that is what fees are all about, swaps are all about, and commissions are all about. So check their website to know their swap fees and their commissions. Okay, and if they have fees that they charge for withdrawals as well, other brokers may not. charge for withdrawals, some will charge for withdrawals. So I have also explained what types of forex pairs are all about, and I will explain this code for you. So whichever type of foreign currency you are buying or selling against another one, those are the ones that are referred to as forex pairs. But you can see that one will come before another. Like for this particular one, British pound came before US dollars. So this is called GBP against US dollars. So the first one that you are seeing is known as the base currency. So British pound is the base currency, base, BASE, the base currency, whereas USD is the code currency. In this particular pair, the first base currency is EUR, which is euro, against the US dollars, which is the code currency. In this USD JPY, the base currency is US dollar, whereas the JPY is the code currency. And when you come to the graph, when you see this thing going downwards, you see the graph going downwards, it means the value of the first currency is going down. And when you see it going up, it means the value of the first currency is going up. So the graph is always representing the first currency, which is the base currency. So if you keep seeing it dropping, it means the British pound is losing value against the US dollar. So the US dollar is beginning to become stronger and stronger, and your ability to predict how these things go up and down is what will give you money in Forex. So that is just what is referred to as quotes and base. Now, what are pips? You'll be hearing people telling you pips, and you'll be hearing people telling you lot size. So pips and lot sizes are very important in trading. If you don't know it, you will lose money until you lose it very well. And I have made a video elaborating in large extent to what a pip is and what lot sizes are. It will pop up at the top right hand corner. You can go and watch it to really learn these things, because you see these pairs, the way for calculating their lots are different. Now I will explain what a lot size is all about first. But then let's say you use one lot to enter the market. So you use one lot around where this blue line is, you enter the market, and it pushed up to this level here, and your friend entered with half of a lot, which is 0.5, at the same level that you as well entered the market. He entered with half of a lot. Do you think you will make the same money? No. You entered with one, he entered with half. So if the profit from here to here gives you $1,000, your friend is going to only have $500. Market has moved this distance from where this blue line is to where the top is here. This movement of the market from one point to another is calculated in what is known as pips. So it's just equivalent to what is referred to as centimeters. Centimeters in length, or when you want to weigh something to know how heavy it is, you use kilograms. Now, if you want to know to what extent has the market moved, we use pips. Is what is known as pips. P-I-P-S. Pips. It measures the movement of the market. Because if you tell your friend now that our market has moved 10 what? It has moved 10 pips. Or it has moved 5. You say 5 what? It has moved 5 pips. That is what is used for calculating the movement of the market. And you can see it represented here. This particular number you are seeing, this tool now has given me that this market has moved from this point to this point by 92 pips. Whereas this one is telling me it has moved from this point to this point by 94 pips. Having known that now, that we use pips to measure, you will ask yourself, how is it possible that your friend you entered from here to here, you are having $1,000, whereas your friend entered the same distance as you and is having $500 and not 1,000? It means the amount of assets that you bought were more than key. So it means you may be holding 10 of the assets, whereas your friend may be holding 5 of the assets. That number of assets that you are holding in Forex is known as lots. So you don't just buy for just buying sake. You buy based on lots. So if you are buying an asset with one lot, you will have more compared to somebody that bought with 0.5 lots. So we use lots and we use pips to know. So you can tell your friend, I bought USD JPY with one lot and market move 100 pips in my direction. Your friend has known how much you made as profit. So you can know that, okay, this is the profit that you are going to make. So if market goes against you, don't want market to continue going against you continuously. There is something in Forex that you will set. You will tell the market, your broker, that if price gets to this particular level and it goes against me, please close that. Even if I was offline or I was sleeping, you will place an order here that once market goes against me, close that order. And if market goes against you, it will close it. This thing that you will place here is what is known as a stop loss. You want it to stop your loss, a further loss of your account. You don't want to drain the whole of your account. So you tell it, please, if it reaches against it, let it what? Stop at this. That is what is known as a stop loss. So even if you were offline, your phone is off, or you are sleeping, the market will automatically execute this one for you. That's the work of your broker. They need their servers to be constantly online. So they will close the thing, and you wake up and you see you have a loss and it reached this point and it closed for you. It's very important. You don't trade without a stop loss. You also set another point. You tell your broker that I have an order here. Once market reaches this level, even if I was not around and I'm sleeping, close it for me in profit. Once market reaches there, it will close it in profit. That is what is referred to as a take profit. Some people refer to it as TP. So a take profit. A take profit point. So once market reaches your take profit point, it will close the order for you, and you wake up and you see money has added to your account. Or when you come back, you see money has added. If market goes in your direction and reaches that level, that is known as a take profit. There's a way you calculate it on your trading platform, MetaTrader 5. A video will appear showing you how you can do this automatically on MetaTrader 5. You will know it even before you enter a market. That is what pips is all about. So let me just briefly explain to you what Forex analysis are. So what you are seeing of these green and red candles moving up and down. So this is a candle. This green thing that you are seeing, this green that is long like this, is a candle. This red one too is a candle. Any green bar or red bar that you are seeing here is a candle. As they form patterns, the whole of these patterns that I'm viewing is what is referred to as a Forex chart, like a graphical representation of price movement. That is what is referred to as a chart. The colors do not matter, but most people use these green candles to refer to the ones that are pushing up, and the red candles to refer to the ones that are pushing down, just for your own notice. Someone can change this green candle to become black or red. You can change the colors. You can always change the colors. You can say I double click on that and I can change this green candle to become blue. It doesn't matter. Okay, it's still showing you the direction. So it depends on your favorite color. You can change it, but most people use green. So let us leave it to be the green color. So you can see we have green and red candlesticks. You can see the time frames here. If I click this 30 minutes, it will show me candlesticks that each candle is representing 30 minutes. If I click this 1 hour, it's showing me each candlestick represent 1 hour. So this 15-minute candlestick that you are seeing is telling me within 15 minutes, price move from here to this point. And then the next 15 minutes, price pushed up and came down again. So when you have 4 15-minute candlesticks, you now have 1 hour. So you can have 1, 2, 3, 4 combined together to give you a 1 hour candlestick. And if I go to 1 hour, you will see that this particular point is just a single candlestick. It's telling you a single candlestick on this particular point. So let me go Where did we cycle? You can see it. It's just a single candlestick showing you what happened within 1 hour. That is what time frames are all about. They show you the movements. So if you see somebody viewing any, it depends on how long you want to be waiting to take a trade. So for people that love trading within the day, they use 15 minutes time frames, when to take entries and when to exit within 1 day. If you use 4 hours, you will see that you will have to wait for a long time. So people that wait for weeks when they are trading, they are known as swing traders. It means if they enter a trade, they may hold it for 2 weeks, 3 weeks. They are known as swing traders. They can be using the 4 hours to know. So they won't take decisions with tiny time frames. Whereas for people that want to go into a trade within 1 day, come out, they are known as day traders. They trade within 1 day. They use 15 minutes. And then for people that enter a trade within 1 hour, they are out within 1 hour. They are known as scalpers, and they may be using 5 minutes time frames, or they may be using 1 minute time frame. Okay, now each of these time frames, they have their advantages and their disadvantages. The advantage of 1 minute is that within a short time you enter, you are out within a short time, because you are a scalper. You scalp the market. Okay, but the issue with this 1 minute, 5 minutes, 15 minutes is that they can easily be manipulated. So somebody that had bigger amount of money can manipulate the market. You think he's going to buy, you see it pushing up, you think he's finally buying, they'll push it down again, because it can be manipulated. But it's difficult to manipulate on higher time frames, such as 4 hours. You are going to be using these candlesticks to know when you are going to take your entry and when you are going to exit. As a beginner in Forex, you may see a candle pushing up. You say, price is going up. Then you begin to buy here. You see, market did not go much. It began to go down. That pattern that you follow to see that anytime I see a certain pattern on the chart, it is telling me that it has a higher chance that market is going to start going up. That pattern that you follow on the chart, that is what is known as a setup. Some people call it a setup. So they will tell you, I'm waiting for my setup. Or some will say, I'm waiting for my pattern. If I don't see that pattern, I will not go in. If I don't see my setup, I will not go in. That is it. Your ability to detect these things on the chart is what makes you profitable. So if you look out for patterns of these candlesticks to tell you that when I see something that looks like a W, I'll go in for a buy, you are trading chart patterns. So that is it about Forex strategy or setup or patterns. The next thing now we are going to do is back testing, and I will do it together with this trading view and win rate. If you have known that anytime the market touches this point, it goes up on 4 hours time frame. This is my time frame. It touches it again, it goes up. It touches it, it goes up. It touches it, it goes up. You will now say, I have been observing something. Anytime that I see price rejecting here, rejecting it 2 times, the third time price will obey it. You will now go back again. You are now going backward to what has happened before. You will say, you will tell yourself again, I'm observing something. Anytime that price touches a level, look at it here. Anytime price touches this level, it pushes it down. It touches it the second time, it pushes it. So I'll wait for it the third time, it pushes it down. You say, this thing is working. You will now check again by going backwards. This testing that you are testing what has happened in the past is what is known as back testing. And you can use it on your demo account, such as this. You say, okay, let me try this thing on a demo account. Anytime market rejects it 1, 2 times, the third time I'll wait for it, you enter. That testing that you are testing is known as back testing. And it is something that is very important. Don't just pick any strategy and just start using it on your real account without testing it on your demo, without going back into time to see that is this thing being obeyed. If it is being obeyed, you can say out of 100 trades, how many times did it give you wins? Out of 100 times. So if it is giving you 60% of the time you are winning, it means the win rate of that strategy is 60%. If it gives you 80%, anytime you win out of 100 trades, it means the win rate is 80. You only need a win rate to be more than 50, about 55%. You need 55% win rate in order to become profitable in Forex. But if you are going to have 55%, it should be with a ratio of ×2 as your reward. So if you are losing, lose only 1. So you have something like 1 to 2 as your reward. So if you are risking $100, you should get $200. If you are risking $200, you should get $400. That's what a risk to reward means. So the first part is the risk, the second part is the reward. So your risk should be 1, your reward should be 2. Once you have a strategy that gives you that anytime you lose only a small part, and you win a higher part. If you have a win rate that is up to 55%, you are a profitable trader already. You don't need to be looking for any strategy again as a beginner in Forex. It's a problem that beginners make. They think as if their strategy is not good. As far as your strategy is giving you ×2 of whatever you are risking, and it gives you that anytime you take trades up to 10 times, and it's giving you up to 7 times or 6 times as wins, it is profitable. Don't go looking for anything again as a beginner in Forex. That is what win rate is all about. That is what backtesting is all about. Now, where will you backtest? You can backtest on this platform that I am doing. Most traders, they backtest on this platform that is known as tradingview.com. Look at it, tradingview.com. I have made a video explaining the completing everything you are seeing on the chart here. Everything from the settings to how to use these tools. So if you're a beginner in Forex, you're interested in learning about this platform, a video will appear at the top right hand corner. You can click on it and you will go watch it. So you can come and do your analysis here. You don't necessarily have to buy and sell on this trading platform. You can check it here, because whatever price that you see here, when you go to your broker, is the same price you are going to be seeing there. You see, this is the price of Ethereum, 2547. Look at it. If I go to Xnet now, this is the current price of Ethereum as well, 2547. So whatever you are seeing here is the same thing you see across any other charting platform. So you can use this to analyze, and then you go back to your broker like your Xnet or to FBS or to Bybit, and you take your entry there. If your broker is affiliated to TradingView, you can actually connect them. I have made a video on how you can connect if your broker is partnering with TradingView, because not all brokers are partnering with TradingView. And it's not that if your broker is not here, that is not a good broker. You can still be a good broker, but they don't want to partner with TradingView. So some people may just want to take their trades here. You can connect your broker with tradingview.com, and you take your buy and your sell options here, if that is what you want. But like me, I only use TradingView for charting. Then I go back to my broker to take my entries. So this is very good for charting, because they have so many tools that you can use that will help you, like trend lines. You say, oh, there's a trend, market is coming here. Anytime it touches, it bounce back, it touches, it bounce back. Or you can use Fibonacci. You say, okay, I'm using Fibonacci retracement. Anytime price reaches my 50% level, I'll go in. There are a lot of strategies. So all these tools are available on TradingView, and the tradingview.com is very fast compared to even that of your broker. Your broker may not be fast like the TradingView. So TradingView is very fast and is very good, and they have free tools, okay? And you can use them to also backtest. They have a backtesting tool where if you pay, this one is a paid tool. So I'm not advertising anything for anybody. It is a paid tool. So you can pay, and you can actually cut out some parts. It will cut out some parts for you. You see, they're telling you is paid, so that you will not see any of these candles, and you can begin to apply that backtesting that I told you. So you can even go 2 years back and cut out 2 years back, and you can say, anytime I see here, I take entry. I see here, I take entry. I see here, I take entry, and you see if that thing is actually working for you. So this is their backtesting tool. We go on. We have known what backtesting is. We have known what TradingView is. We have known what win rate is all about as a Forex beginner. You have also known what stop loss and take profit is. This is where we are going next, trading platforms. Now, I will just want to explain this briefly, and then I will show you the real trading platforms that I am using. Now, a trading platform is not a broker, it's just an application that you can install on your phone or on your laptop, and you will connect your broker. Your broker will give you their details. You will connect it to that platform and you will use it to trade. So you will ask yourself, if I can trade on my broker's app on my phone, that's their mobile app, why would I need a trading platform? There are many reasons. The first reason is that your broker might be slow. Their servers may not be dedicated for trading alone. Sometimes you may want to log into your broker. It may be sluggish because of network issue that they may be having, or they have a lot of applications that they are serving at the same time. So like on your browser now, it may not go quickly. It may not open quickly. So you may want to execute and it may not happen. Another thing is convenience. On your laptop like this may seem a bit confusing for you, and you can't carry your laptop to be moving about with it. So even though I have an account with Xness, I have an account with Bybit, I don't directly trade on Bybit app, neither do I trade on Xness app, because it's a bit inconveniencing for me. So I connect my account details with another trading platform and how to connect to these trading platforms. So if you want to know how you connect to all these trading platforms, a video will appear at the top right hand corner. I showed how I connected to my MT5 and how you will start taking a trade with it. That is what a trading platform is. Now, there are different types of trading platforms, and I am going to show you the different types of trading platforms that are here. So we have CTrader and we have MetaTrader. So MetaTrader platform is shortened for MT. So they have MetaTrader 5, they have MetaTrader 4. So for the MetaTrader 4 is the first that first came out, and they modified it and added some things in the MetaTrader 5. So I use MetaTrader 5, shortened as MT5. For MT4, it has some limitations, but however, some brokers still use it even till now, and some people prefer it even till now, but I prefer MetaTrader 5. It is very fast as well, just as it is with this, and it has some functionalities that MetaTrader 4 does not have. For CTrader, most people do not use it, even though they are common, but a lot of traders don't use them. Some brokers may not have them available, but there's no broker that will have just CTrader without having MetaTrader. So MetaTrader is the most popular of all the trading platforms. There are other trading platforms available that you can connect your Forex trading account with them and you will trade with them. So I am going to show you right now the trading platform that I am using. Okay, so this is my phone screen right now. The MetaTrader app that I am talking about is the MT4. This is it, the MT4. As you can see it, I'm moving it over here. This is it. You can click on it and it will take you in. So I'm going to click. So this is how it appears. It has its own chart as well that you can see. You can see how it is looking. Now, I was talking about spread the last time. You can see it clearly on the MetaTrader now compared to it was not shown on the trading platform of Xness. You see this gap that exists between this green candle and the red at the top. That white gap that I seen is what is referred to as spread, and it happens in the night the spread is widened. It can collapse when is the period of high trading activity, like the London and the New York session that I told you about. However, I'm not talking about spread now, but I just saw it and I want to emphasize it again. So when you click, this is how you will see it. There is a place, the lower left where this arrow is, you can see the codes. These codes are just referring to the pairs that you are adding, and the plus sign at the top here, you can use it to add any Forex pair that you want to add. So I can type USD and any of them that come out, you can now scroll and select the type that you want. See USD, Canadian dollars, USD, Swiss franc, a lot of them, and you can cancel it if you want. For gold, you can as well go for gold, check XAU, but gold is not part of Forex, like I said initially. Okay, so that is it. Now you can see I am already in a trade. This is on a cent account. On a cent account. Now, a cent account is an account that is very good for beginners. Is very good for beginners. With your $10, you can convert it to cents, and you now have like 1,000 cents. A small lot on a cent account will not drain your account much, and is very good for practice. So any Forex beginner should have a cent account because it's measured in cent. This 2.8 that you're seeing is not $2.8 loss, is 2.8 cents, which means you need close to 100 of this in order to give you $2 as loss. You see? So it is very important for you as a beginner to have a cent account. It is a real account. If you make money from it, you can withdraw from it. It's not even a demo account, it's a real account. But then it gives you the money in cents. And their lot size are much smaller compared to the lot size of a regular account that is deducted in dollars. This one is in cents. Okay, so it's good you should have a cent account. It's another type of real account as well, but it's very good for beginners where they are testing their strategies and their emotions on a real market. Okay, see the chart of the MT4. This is how the MT4 is. If I want to close this trade now on MT4, I have to switch this to the side. Then you click on that mark, that tick, before it will close it for you. However, I don't want to close it. So that is MT4. Now this is MT5. This is MT5. You see the 5 on it. So I'm going to click on it to log into MT5. You can see the platform for MT5. And you can see that MT5 has some buttons at the top that are red. They are red cycle, and at the top right hand corner, I'm pressing on it right now. Anytime you press, you see it drops down the buy and the sell button for you. These buttons are not available on MT4. Now, there are quick buttons that I can just click on this particular one. It will just take me in immediately. It will just take me in immediately. But if you see that those buttons are not available, you have to click this plus at the top. Then you have to adjust and set your stop loss, you set your take profit, you set your, you see, it's more manual to do it on MT4. But when you go to MT5, it's instant. If I have added my lot size here, let's say it's 1 lot, and I click on this buy button, it will immediately buy it. If I click on this sell button, it will, so it's an instant button. If you click this thing by mistake, it will take you into the market immediately. Maybe that's the advantage of MT4, that you have to put it manually, so it's difficult to make an error. But for this one, you want to enter the market quickly. This will take you in instantly. That's why they are called instant buttons. So let's go to the codes and add the Ethereum that we saw the last time, because that is crypto market that is available. You can see this account now is the same as the other one on Xness, the same one on Xness. So if I take an entry right now, I can go to the scroll to where your codes are, click on this Ethereum that you are seeing. I'm going to click and hold. You see it pops up. Go to chart, click on the chart. You go to your chart, you see it's bringing it up here. So if you want to sell the market, you can click the sell button. Right now, it will sell the market for you. You see, I'm in already. I've entered. If I go back to the trade session, if I click the trade session here, you see I'm in already in the market. It is the same thing reflecting on the terminal, because I have connected this Xness account now to that MetaTrader 5. So if you want to know how to connect your broker's account to MetaTrader 5, the video will appear at the top right hand corner. Okay, you see and know how to connect it. Once you are connected, any trade that you take on that MetaTrader 5, it will reflect on your broker. And when you are in profit and you close it, you will see it here and you can withdraw it from your broker, but you cannot withdraw from MetaTrader 5. Are you seeing the use of the trading platform now? So you can withdraw from your MetaTrader 5. You can deposit from your MetaTrader 5. You just connect it and it's very fast in execution. The way you saw me, I executed with it. Now I can switch back and close this trade on MetaTrader 5 and you see that it will close. Okay, so let me switch back again. So you see, this is the trade on MetaTrader 5. The same account is on MetaTrader 5 and you can see the platform here. And one thing again is with MetaTrader 5, I can be adding a lot of positions instantly. Instead of in a MetaTrader 4, you have to do everything manually. In this one, anytime I click 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, see how it's just adding them for me quickly, fast. You hardly see this thing even with your own broker. That is the reason why I love it. And do you know that if you are in a loss and I want to close all these things on MetaTrader 4, you have to follow them 1-1. You will switch it to the left, click this button, and then go and close it like 1-1. You wait for it to close. You see? But on MetaTrader 5, all you need to do is click this 3 dot is for bulk operations. Once you click, you see bulk or close all positions. It will all close them at once for you. You don't need to be going 1-1 like the way MetaTrader 4 will be doing it, and it will all close them at once. They are all closed. That is how fast MetaTrader 5 is, and MetaTrader platform is very fast in general. It's very, very fast in general compared to your broker, and that's the reason, and for convenience, and it's very sweet, very sweet. But then I do my analysis on TradingView that I showed you. Then I take the trades when I have connected it on MetaTrader 5. That is what trading platforms are all about. We have different other types apart from these ones, but they are the popular ones, and I've shown you which one is good. If you want to download MetaTrader 5, you can go to either your Apple Store or you go to Play Store, Google Play Store, and you download it there. I love MetaTrader 5 or MT5 as it is called. We have talked about candlesticks and their patterns. I have explained those ones to you, but if you want to know the strategies I use for my candlesticks and their patterns, a video will pop up at the top right hand corner to explain in depth about candlesticks and their patterns. You may think these topics, you see these 26 and 27, without knowing these things, but even with a very good strategy, you are going to fail woefully in Forex. And is a part that most beginners in Forex tend to neglect. So as a beginner in Forex trading, take these things very importantly. 26 and 27. I am going to show you what they mean. So what is risk management? A risk management is simply managing the amount of money that you are having. The amount of money you are having in your account is what is known as funds, or they can refer to your account capital, or they say your account balance. That is simply what the money that you have deposited into your trading account. You may deposit $1,000. If you don't know how to manage that money or to manage your risks very well, you can lose that money in 1 second. 1 second that you know in Forex. So risk management is you managing it in such a way that you know the right amount of lot size to take, you know the right amount of pips to target and to set a stop loss. So you can say, I will take my entry here, I will set my stop loss here, and I will aim for this high. And the money that I will be risking would just be, maybe let me enter, instead of with a 1,000 account, I'm risking only $10. So with $1,000 account, you are only risking $10 in order to get $20. That is what risk management is all about. Okay, but you have $1,000 account, you want to risk $100 on an account because you are thinking of the profit of 200 only. What if it goes against you? You lose that $100, you lose appetite, and you start getting worried, and it destabilizes you. You can't reason well again. You begin to take bigger lot sizes to recover the money. You want to go and take plenty trades to recover your money. As you are taking, you are losing more again, and it has disturbed you mentally. So the right mindset to enter into trading, the right risks that you are supposed to be risking, is what is referred to as what? Risk management. Maintaining little amounts to get more. That is what it means. And always set your stop loss. Like I said initially, what stop loss is all about. Always set your stop loss. So if you want to know more about risk management, I've explained that one already. Now, trading psychology is simply controlling your greed, controlling your fear, controlling your anxiety when you are in a real account. You won't have much of trading psychology on a demo account, because you can even forget and sleep, because you know it's not your money. But when you are having your real amount of money in it, that's why I said for beginners in Forex, go and open a cent account. If you don't know what a cent account is, a video will appear at the top right hand corner showing you what a cent account is all about and how to use it, and then how to use their lots on that one too. You will see it. It will help you a lot. At least it will start training you on trading psychology, because one thing is that some people may see a candle going up, going up, going up. They don't want to miss the opportunity. They will enter at the top. Market will come down again. They will lose. They will enter again. They must recover. The market will push up again, and then you see them becoming discouraged about Forex, because you are not following set rules. So you have to have a rule that you follow. You have to have the right mindset that you don't have to be greedy. It's not every day that you have to trade. Don't trade too much. Don't be addicted to it. All of these things are part of what forms the psychology in trading. Then the thing I need to talk about now is the economic news. News affects trading, and the website that you can go to check for economic news is forexfactory.com. Look at it over here. And there are other ones like myfxbook.com. You can check for different types of news. There are time that it won't miss by 1 second. Once they tell you this is the time, it will happen, and you can always adjust the time. And for this other website, it shows you to you can adjust the time to your time zone so that it reflects the exact thing. You can always edit and even filter the types of news you want, whether it's major news or news affecting each of the currencies. You click on apply filter, and it will show you different with their timing. Okay, so this is the next news by 12:30 a.m. on Monday. This on Tuesday, like that, you'll be seeing them. The ones we trade are the ones that can move the market very well. Now, if you see a news going to happen, all these long candles are caused by news. They are caused by the news. As a beginner, avoid trading during news period, because before you will realize, it has jumped up. So you avoid trading what? News. And trading using news is what is known as fundamental trading. Whereas if you are using patterns on a chart to trade, is known as technical analysis, technical trading, or technical analysis. So there are a lot of information that will be released. They will release certain numbers like this. If you see that it's affecting this particular currency, euro, and or AUD, Australian dollars, and you see is a high impact news with red, any number that you see that it shows whether it's red over here, if it is red, it means it's going to affect the Australian dollar is weakened. If it's green, the Australian dollar is what? Strong. And you will see it all affecting this. So for this particular, when news is released in favor of US dollars, it will be green at this particular point. So where is the US? This is for US dollars. You can see it. So let's look for any high impact news affecting US dollars, like this particular one now. So if it forms green, it means US dollar is strong. So for this, you expect that the market will jump up. Why? Because US dollar is the first currency, the best currency here. It will jump up. It will buy with speed. You can't have the time to even click any button. Okay. And if it goes against you, it can wipe your account. So I'm advising you as a beginner in Forex, avoid trading news until you know what you are doing. Okay. And that is how news affects Forex trading. I have shown you how to take your first trade on the MT5. Now, if you have any question regarding Forex trading for beginners, just let me know in the comment section. Any further question that you have regarding Forex trading for beginners, just let me know in the comment section. Do have a wonderful day. I believe with this, you have a full course, a complete guide on Forex trading for beginners. You should not be lost as a beginner in Forex. Do have a wonderful day. Bye.